So Liz, is this like a real rally, or is this just like a dead cat bounce? We need to focus on the bond market.
Are any of them real rallies at this point? I mean, we're kind of always teetering on the precipice of joy and pain. And I think this little piece is really the removal of a negative, and that's different than the addition of a positive. I mean, we came into this year rallying on hopes of a trade deal, on hopes of easy Fed policy, a strong consumer, and a strong labor market. We still have the strong consumer and the strong labor market, but those first two pieces continue to be question marks. So anytime there's pressure on either of those two pieces, we're going to see volatility. And it's interesting, even just the word volatility, usually we use that as a mask for negative, right? We say things are volatile, but really that just means things are down. Right now, they really are volatile. We're going up one day, down the next day, and back and forth in this seesaw fashion. So I don't necessarily trust any big move in one direction or another. I think we need some definitive answers on, are we going to get a deal? How heavy of a deal is it going to be? And what's going to happen with the tariffs?
Definitive answers. That's a lot to ask for, because it strikes me the one change we've seen is we have world leaders, and it certainly includes President Trump, but not limited to President Trump, who really are changing markets in just a tweet, in a statement, in an offhand remark. You see it over in the UK right now with Boris Johnson, but certainly President Trump can change it in a moment.
Right. We're hypersensitive to any headline. And if you look at fundamentals that can drive a market, we really haven't been reacting to fundamentals as much as I would prefer that we're reacting. So if you look at earnings, I mean, we've had uninspiring at best earnings growth this year, and the market's still up over 16%. Last year we had the highest earnings growth in maybe ever, and the market was down 4%. So we're not really looking at fundamentals the way that we should be. We're looking at macro headlines, we're looking at risks, we're looking at rhetoric.
So, do you like bonds?
Yeah, I still do like duration, and I know that sounds crazy.
Where?
In the U.S., if you want traditional duration, so that can be investment-grade corporates, and that can be treasuries or any government-related. Because when you look at where we are trading, yield-wise, we're still above the rest of the world. And that appetite for risk avoidance isn't going anywhere anytime soon. So if you're an investor that still needs a safe haven, you still need something that's going to offset beta, you're still going to buy traditional duration.
Would you buy 100-year or 50-year?
I don't know that we need to buy that yet.
Because he's seriously considering it.
Right. I think really the intention of that is to create a more positive yielding security. And again, if we look at our yields versus yields of other economies around the globe, we're still okay. We're still attractive.